Morning, everybody. Today we are going to discuss the first half of the year, 6 months financials for the Dhofar Food and Investment Company. And will join us CEO Mr. Ahmed Ali Qatan and Group Financials Controller Mr. Bergenders and Finance Manager Mr. Shashanka. So we'll discuss the first half of the year, the financials and the situation of the company. And after that, we will have, or we can address any question addressed by any of the joint company and staff. Firstly, I will present Mr. Ahmed Ali Qatan, the CEO of the company, to just give a brief for the financial and for the second quarter of the year.
بسم الله الرحمن الرحيم. نرحب بكم في مناقشة البيانات المالية لشركة ظفار للأغذية والاستثمار، بيانات النصف الأول لعام 2023. اسمحوا لي أن أعطي ملخص للمقدمة عن أداء الشركة النصف الأول، حيث بلغت زيادة في عملية الإيرادات 17,612,000 مقارنة مع 15,756,000 بزيادة بحدود نسبة 12%. وهذا عائد إلى زيادة إيرادات المبيعات في مصنع الأعلاف ومنتجات الألبان بالربع الثاني من العام. وهناك كذلك كان في تعديل في أسعار المنتجات ليتماشى مع أسعار التكاليف. كما برضو في نفس الوقت ارتفعت أسعار تكاليف المواد الخام من النصف الأول، وفي انخفاض في كذلك تكلفة المواد للنصف الربع الثاني، وسوف تنعكس إن شاء الله في أداء النصف الثاني من العام الجاري الحالي. هناك برضو اهتمام كبير وتحسن في أداء الإنتاج للنصف الثاني إن شاء الله، وسوف تنعكس أداؤه وبياناته المالية في النصف الثاني من هذا العام مباشرة. I would like to welcome all the donors and our sessions, financial session for the first half of the year 2023. And you wanted to mention there is also increase in the revenue for the first half of the 2023 by 12%. Last year was for the company 15,709,000, and for the half year this year also for the company 17,565,000 by the 12% growth. This and for the group from 19,031,000 to 20,481,000. The cost of the raw materials there is increase for the first half, and there is decrease also in the cost at the same line. The impact will show it inshallah in the next half of this year. There is also improvement in our operational activities, which will impact also, they will see the result in the second half. And we have hope, inshallah, that is our result will be good. I will leave for the detailed financials to my colleague CFO, Mr. Bergenders. He will go and he will start. Mr. Bergenders, please.
Good morning. We welcome you all to the H1 presentation for DFI. We run through not only the DFI as a company, we'll run through as a group also. So if you see from the slide, we have split into quarterly. And due to the high prices in quarter one, we suffered a loss, but significant improvement have come in quarter two. And you see we become the cash break-even. So EBITDA profit, we are at a profit at EBITDA level. At sales level, we grown by almost 13% in H1 versus the last year. Due to high cost of sales, which is majorly due to the commodity item, there is a still disruption in the market. The supply chain is not smoothened due to Ukraine-Russia war, freight are higher, and we are sourcing a high quality products. So still there is some constraint here. But in quarter two, you say there is more than 50% increase in the EBITDA, GP margins. From quarter one, 9.2%, we have moved to 14.8%. How we try to control our P&L is we try to control our fixed expenses. And if you see from quarter one to quarter two, most of our fixed expenses are lower. And even versus last year, actuals, like admin expenses, we were 727,000 and we were 5% lower. Similarly, on sales and marketing, we are 2% lower, which helped us to reduce the leakages from the P&L. And we see this trend to continue in H2, and with God grace, our quarter two shall be better. Quarter three and quarter four shall be better than the H1. Similarly, if you see at a group level, our subsidiaries have performed well. Omani Gulf Food is in profit. We got a good share from there. Dhofar Beverage is flat. And DFI, we already discussed. IPI is profitable company. We have some problem in the DPC because of the seasonality, which will be, I think, not impacting any result in the H2. So quarter two and quarter one are always a tough quarter for DPC because of the environmental factors, high humidities and other factors. And in the H1, we face the egg blockage. We cannot import from the main country, which is Turkey. So we have to source a higher and expensive eggs, which impacted the results. Coming to the consolidated balance sheet, inventories are in control. If you see, the inventories are even lesser by 2 million. So this is a cash release to the system. Similarly, our debtors are flat. Even with the 13% higher volume value, our debtors are same. So we have reduced our cash turnaround cycles. Payables are flat because there is a still stress in the market. Rest all things are same. There is no major capex done. There is no major changes except this. If you go to cash flow for H1, we see there is a cash release from the operations. How it came, we maintain our debtors and we maintain our inventories lower by 2 million. So there is a good increase of cash into our operation, which released some stress from the banking side. And this will give me a saving in the interest cost. So both the places, not only at a DFI level, but at a group level also, there is a 2.7 million release from the operation side. So no major capex. No major except the borrowing and the repayment interest. There is nothing major, and we are a cash positive at the end of the H1. Key ratios. There is a significant improvement in the current ratio. That means we are improving in the liquidity. Working capital ratio, even it is now lesser by 3 million. Quick ratio, again better. Debt equity ratio, flattish. Operating margins are still negative because of the H1s. So this is all from our side. Any questions and anything open questions, we are happy to address from the management side, from our CEO, our board secretary, and the finance side. Thank you.
Okay, thank you, Mr. Baljinder. I don't know if anybody is joining us or any question from the outside people. Cash flow, and there is operation control. We control the operation in the poultry a little bit, and the other subsidiary companies and sister companies. Our problem, as Mr. Baljinder is saying, that the weather is a big problem for us.
Yes.
Because we are dealing with animal, with cows and poultry. So the humidity and increase of heat and humidity, they will affect sharply in the production.
Yes.
That's why, but we are hopefully will cover all this by the winter
Yes.
season.
Yes.
The weather will be good, the milking will be high for the cows, and also we will not suffer any more mortality in poultry business.
Yes. So I would say the bad is over for this year, and compared to last year, we are better.
Yeah, of course.
We are better.
Indicators, all the indicators for us is showing that we are on the right path, and our result is very good.
Yes.
The second half,
Yes.
and we'll see it in the second quarter and third quarter, fourth quarter.
Yes.
Okay. We are in the right direction. The impact and the revenue also is very good. The corrections action which we made, the community, we are on that, getting the fruit of it. We have also very technical team.
Yes.
Us also joined us, and their involvement and contribution is very good. Okay. And we hope, inshallah, we'll see it very soon.
Yes. So things will stabilize, and we are becoming more resilient and proactive. So wherever we see we can save some cost, we are doing, and we are planning it. So it is not like that how it comes. We planning it. So planning is more important now.
Yeah, yeah.
Yes, yes. So we are keeping the planning window now 3 to 4 months. So I think no other question answer, so we can.
Other questions, so we'll close the session, and we also can receive any question by the email from outside people, and you are very welcome to ask any question and send email to our departments, financial departments. Thank you everybody for joining.
Thank you very much.
Thank you.
And welcome.